Great, everything's set up. Good morning, everybody. Okay, few opportunities around. I want to go through it with you. So, before we get stuck in, remember, particularly if you're new, the whole process of these fundamental sessions is to focus on understanding what the fundamentals are, then understanding what near-term sentiment is, and then finding decent technical entries for high reward, low risk. Yeah, I know. It's been absolutely ripping, Stephen. I've been looking at it. We had a nice gold long earlier in the week. I closed it out just before the Fed meeting, and there's another potential long opportunity I want to talk about with you today. Crazy, isn't it? I mean, even a strong dollar hasn't been impacting. God, the amount of central bank buying. The big narrative, Stephen, is that investors are concerned that countries around the world are debasing and devaluing their currency. So hard commodities are in demand: silver, gold, copper, something that's tangible, right? Nice. Yeah, yeah. I'll have a little look at that. Show you what I'm looking for. Um, Now, remember, if you're brand new here, I know that's it. I check out my copper positions, and I was very happy, up 20% now on that from that big dip we got. So that was a good opportunity. So I'll just run through that briefly. Um, If you're brand new, don't forget, go through the macro fundamental masterclass, risk event trading strategy. It'll help you sort of tune into these meetings very well. Also, don't forget the first thing we look at in terms of daily preparation is the news feed. And there's a couple of major things to be looking at is one, the Federal Reserve interest rate meeting, and two, the earnings that we had overnight after the close yesterday. So headlines, Fed kept rates unchanged as expected. Vote split 10-2. That was expected. Waller's got his eyes on the Fed chair. I think he's slipped into third place now, but both of them, calling for a 25 basis point rate cut. Powell said that rates are in a plausible range of neutral and at the higher end of the range of neutral. Fed sort of saw one interest rate cut this year. Short-term interest rate markets see two. So we're kind of getting towards the end of, you know, are more interest rates cuts coming or not? Um, the Fed emphasized that growth is higher than they were expecting. If there was a dot plot yesterday, jobs market would be revised higher, growth would be revised higher, right? Everything's a bit firmer and doing a bit better in the US than it was in the last plot in December. So that should keep the dollar supported. But everyone's wanting to sell the dollar around the world. So we've got these twin kind of drivers. I still think a snapback in the dollar is not unreasonable, but we're going to be led by the market. And my basis is with Powell sort of hinting that, there could just be maybe one rate cut only this year. That is in contradiction to short-term interest rate markets. So perhaps a little snapback in this recent dollar weakness wouldn't be unreasonable. And I'll show you ways that I'm looking to take advantage of that. Apart from that, we've got Apple earnings coming up later. We will look at the recent jobs data we had. And not jobs data, the recent earnings, and see that's broadly positive. Um, do look at the Fed decision for more detail there, but bottom line wasn't really much um, change. If anything, it should be mildly dollar supportive, but we're not seeing that. But we would expect mild dollar support. Meta, Microsoft, Tesla. Tesla's earnings, um, Tesla's still gaining despite the fact that they've dropped revenue for the first time ever. But the other news from the company, their robo taxis, Robotronics, has lifted sentiment. And the rest of the major US companies you can see here, right, on balance, pretty strong. So if you look at the US futures for this morning, S&P up 0.3%, Nasdaq up nearly 0.4%, Euro Stoxx up 2.3, Russell up 3.7. Going through back to the session, the headlines to be looking at. FX dipped marginally lower after gaining yesterday, with strength seen throughout the Friday heading into the FOMC announcement. So a lot of strength was in the announcement, and then it sort of faded at the end of it. Um, no surprises in it. But the other thing to note is they did see the tariff effect on goods pricing peaking over this year. So that if tariff peak pricing has finished, then the Fed do have a little bit of capacity to cut rates. So analysts like ING still see two interest rate cuts coming from the Fed this year. So we're not really anywhere clear in terms of massive sentiment. The only thing I'm looking for is a little bit of a dollar retracement in terms of the sentiment today, with a slightly more hawkish Fed than perhaps markets were expecting, right? So that should support the dollar. So what I'm looking at today is a couple of opportunities. So first of all, here, no, let's check. I should be triggered into my dollar long here. Yeah, so just being triggered into this dollar long. So yes, they're looking at this level, right? Got to break out. And obviously, I closed before the Fed meeting with that dollar Swiss franc. But if you look at this dollar Swiss franc pair, you look at the yield spread, it's reaching up, right? So yield spread reaching up. We've had this, look at this Harami inside bar. So that's a Harami inside bar that's forming, okay? So a very nice kind of structure for support. And if this Harami inside bar breaks to the upside, then that becomes very strong support. And what you're looking at then is the potential for like a strong hammer reversal bar. So looking at this, I've just entered a long here based on the technicals of this swing point being taken out. Now, if you look at this on the 1 hour chart, I'll get rid of yesterday's entry, right? So that was just close that out before the Fed meeting. Now look at this here. So yes, so what I was looking for was left shoulder, right shoulder, break. Right now, this is no longer like a head and shoulders pattern, but what it is you've still got the hangover of this trend line here. So just looking at this intraday, and like the very sort of earliest sort of trend break that I could see was on this line here, just up through this level, right? Just taking out those highs here. So what I'm going to do is I'm going to look at this as a potential rallying point for dollar Swiss franc. So the strategy will be, right, if I get sort of 20 points higher, I'm going to take off 50% and then leave the other 50% at break even. I'm going to try up to 3 times. So, right. And I've got a 5 point stop on it. Right now, if it's very aggressive and goes up very quickly, then I might not take 50% off. But that's kind of like, a basic rule of thumb to go with it. Okay. So that's dollar Swiss franc based on that dollar recovery. Now, euro dollar got exactly the same principle from the 70 region. Okay. So back at that region there, and you remember that level yesterday broke nicely in the end, and dollar strength out of the Fed meeting, right? Um, so that level again, short or long, right? Both make sense to me. Above, long, underneath, short. But at the moment, I prefer short only, okay, from 1970 and just like a 4 or 5 point stop. So they're the sort of dollar strength scenarios that I'm looking for. If price does like kind of go back above that level, Tudor, yeah, now yeah, Tudor, it's a great question. And let's see who's the so I was looking at this earlier. So Rick Ryder and Kevin Walsh are candidates. Now, Walsh, I think, is a dollar bear, and I think Rick Ryder will be the same. Let me just check. Let me just do a little bit of research on that. Right. Okay, Walsh they're seeing as potentially too hawkish, and so unlikely to be nominated. We know the nomination I think is due to come within a week. Let's see, Ryder. Apparently Trump is struggling to find someone who shares his views. I find that really reassuring. I'm just going to have a quick search on another news source. You raise a really good point, Tudor, right? Just having a look if I can find someone here, something definitive. So Walsh is maybe hawkish. Waller is sort of midway point. Right, I won't look much longer. Sorry, folks. Yeah. Okay, I can't find so Walsh is probably slightly dollar positive. Waller would be sort of more neutral, and I'm not sure on Reader. Sorry, Tudor, that I can't help you with that. But if you just look at the yield spread, right? But your way of thinking is good, right? So you just have to do a little bit of research there and work it out. But you see that nice divergence, yield spread pushing up as the price is moving lower. So a snapback here, even if it's just technical, um, is not the end of the world. And just with a few points stop, you can get a high reward, low risk entry with the potential for this to run from being a Harami inside bar. So that's like kind of my trade of the day, if you know what I mean. Um, and minimal risk again. Euro dollar from that level, again on the dollar longs. Gold. Now, gold has been relentless. And, you know, the only danger with an instrument like this is that you get wild swings. But with a very small stop, you should be fine. Okay, you're not having a big position. Got a nice symmetrical triangle pattern holding up. We had that break from earlier in the week from Tuesday, Wednesday. And you can see that was a lovely, we got something like a 20-30 risk reward on that. And that just continued going up and up and up. Right. What a run. And it was this original run here. Now could look for a $7 stop with a break above those highs here and here. So 5,590. Well, probably five. Let's just see, where is it? I would make it the big round number. Right, so 5,600. Just above there. So hit 5,600, $7 stop, right? Hit $20, move it to take something off, move it to break even. And see what you can get a run. Going to get a run up to 6,000. But that structurally is very hawkish, right? So looking for this to break out, looking for on balance volume to push up, and then just a $7 stop. So don't risk more than that. You don't want to be buying in with large stops under here, could get very volatile. And obviously a correction would be if you broke underneath that level here. So I'd say there's opportunities here, both long and short. At some point, there's going to be a correction on this. Um, Obviously, slightly trickier, but again, you could go for a $7 stop to the downside. But the thing is, I just wouldn't be, I would only favor longs because look, you don't want to be fighting that trend. But at some point, there will be some correction. So gold long still looks suitable, and all the weakness in the dollar, any bids into bonds, all of that's just going to help gold keep going up. Right. So there's that weak dollar debasement dollar trade is like rocket fuel for gold. So they're the trades. Keeping my eye on United Health as well, with the Harami inside bar having formed there. So do look at that. If we get a break up there, we could get an inside up pattern. I'll keep an eye on that for tomorrow. Looking, uh, you got a variety of instruments you could use, RAM, but maybe XAU USD, right? So XAU USD. It's probably simplest. So with the lowest spread as you can is what you want for intraday trading. Now, the other thing to be noticing is this breakout we're seeing in the China 50, right? Nice little area, bullish near attempt at a bullish piercing line, inside bar, inside bar, inside bar. Look at this on the weekly, and there's a potential for a bullish piercing line pattern here. So there's a reversal pattern trying to be put in. Now, if that's going to work, the area you can get into this trade with absolute minimal risk is on this level here. Let's just change that. So getting in at the 15,035 with a 20-point stop, try up to 3 times. Technically, that's an attempt at a breakout here, right? So that level, a retest of this potential trend line, which is also a retest of this level. US earnings fine, US economy doing well. There's some AI chips from NVIDIA being bought by China. Attempt at a bottoming here. And you're only risking 20 points, so a total of 60 points risk on this level breaking here. Right. So I'd look at that for the China 50, as long as you can get a decent enough spread. FTSE 100 also looking for a breakout here above the 10.250. Right, again, move up sort of 250, 270, 280, 20, 30 points, take 50%, leave the rest at break even. But that's another nice structure we're building, just like we had a breakout here, right? Looking for the same kind of principle, just like we had a Harami inside bar there, breakout, right? Looking for the same kind of thing, breakout to the upside. So there's two stocks just after the Fed decision. No big surprise there. And sentiment is positive when we start the session. Yeah, jobless data, well, yes and no. So yes, it's going to impact sentiment. But basically, the Fed think that the US labor market is flat, right? That's the bottom line. Now, if you look at, Powell has sort of said he thinks that jobs data are about 60,000 too high. So that means the US economy is kind of neither adding jobs or subtracting jobs in the Fed's mind. The recent string of jobless data has been really strong, S. So if it's a weak report, like it's 1 week report, is the market going to suddenly freak out and think, oh, everyone's read it wrong about the US jobs market, and here's the initial jobless data that's suddenly shown there's a massive problem? Harder. Now, the US confidence report earlier in the week, consumer confidence, was showing like prospective job losses coming. So the market will have an eye on jobs because jobs is part of the Fed's mandate. But if you just look at this Fed decision, they took out this January statement. You see, what did they take out? Right. Let me just find out. Let me tell you what they took out. This is a great point you raised there, S. Um, and in the December meeting, the Fed said downside risks to employment rose in recent months, but they removed that yesterday. So the Fed are saying they're less worried about jobs data, right? Now, the recent run of jobless data has been good. So it's just get through it. Now, if it was really high, plus 222, and the continuous jobless claims is also really high, right? Then it could impact sentiment, but unlikely to. So it's not something I'm like thinking, nah. Especially with the Fed removing that line. And they're saying, yeah, we see it slow. It's not like they're saying, they're not like in denial, right? They're saying, okay, the market's numbers are too high, but still we don't see a massive problem. Do you see what I mean? So that's quite a that gives you confidence, doesn't it? You think of the psychology of it. Saying, oh, your numbers you've got are too high, but we're not worried about it anyway. Okay, fair enough. Looking at the rest of the data, here is economic sentiment, nothing. Jobless data, yes, it's important, but limited in the ways that I've outlined. Bond auctions coming up 7 year for US, Japanese CPI. Brr. Let's have a look for tomorrow. German inflation data, GDP, PPI. No, so there's not massive a lot of important. Yeah, does that make sense, S? And if you look at the jobless data, you'll see how good it's been, right? Initial jobless, look, it's going lower and lower and lower. Do you see? It's strong. Less and less and less. So it's a great jobs market. Now, if it pikes up higher, yeah, it'll get market attention, but look at the trend. You see what I mean? And obviously, the less people who are claiming these benefits, the better. I don't say that for your benefit, for anyone else who's maybe just watching the analysis, right? So bottom line, right, what I'm looking for is a snapback in the dollar. That's kind of what I'm looking for. Um, and I've got a minimal stop, plus the potential upside in gold, plus the upside in the equity markets in China 50 and the FTSE 100. Um, and that's partly because there's nothing massive else around. Do you know what I mean? Copper, yes, that's benefiting. You could look for sort of breakout moves in copper. Um, my copper longs I bought right down here, right down at this level, 4.399, right? I'm now up sort of 20% on the index I bought it in. It says 40% here, but I'm actually up 20% on my index. Um, Sort of a long-term trade. So I just saw it as a long-term opportunity. There's some structural reasons for copper weakness that are likely to drive copper prices higher over the next sort of 3, 4, 5 years. So that was a great opportunity to buy in, right? So I'm looking for a bounce off there and a continuation. All right, folks. So, bottom line, the sentiment is uncertain. Is the dollar strength going to come back? Or is it we're going to see a bit of dollar weakness? My instinct here is that that's a retracement in the dollar Swiss franc. Harami inside bar, yield spread pushing up, so I'm wanting to go long. So that for me, that's the trade. I'm going to try up to 3 times, 5 point stop, 20 point break even, and take 50% off. So that's could be wrong, might not be. It's not like there's a massive reasons for dollar strength necessarily. It's not, and this recent weakness in the dollar has been quite pronounced. But that's the logic to it, all right? And if the dollar weakness does carry on, then gold upside, right, can benefit. So what the left hand takes away from you, the right hand might give. That's the philosophy for today, folks. Hope that makes sense. Yeah. Take care, and I look forward to seeing you tomorrow. Yeah. Cheers, TM. Catch you later, Najam, Lauren, Tudor. Good to see you, mate. Haven't seen you in a while, so good to have your name here. So, yeah, see you later, mate. Bye for now.